This is Eric Muada with Muada.com, going into the week of April the 16th, 2012, which is an options expiration week. Let's take a look at the markets here. We see that the QQQ, after 14, yes, count it, 14 straight weeks in 2012, we are we had a negative close for the first time going back to December of 2011. So it has been a straight move as far as QQQ is concerned, mainly due to the strong performance for Apple. But we are seeing a pullback this week. Really, you can't say it's a bad pullback because after such a big run and a prolonged week to week to week, back to back closes, that's normal for a pullback. In fact, it's way overdue. So the QQQ fast pullback in 2012, that's as unbelievable as it sounds, still remains above the 10-week moving average, which is a strong indication. Now that was the weekly. If we take a look now at the daily, we see that again after this strong breakout here, we had a straight move to the upside, and now we are having the first weekly close to the downside. Now as far as the stock is still, the QQQ is still remaining above the 50-day moving average, so it's really a normal pullback for now. Also, you'll notice that on the RSI, after we are finding support. If you take the lows on the RSI and the daily RSI, draw a straight line, which is a red line, you find that we've settled down exactly where we might find support. So the dailies are telling me that the market is going to be moving or attempting to move higher during the options expiration week. The dailies are telegraphing that kind of a move, but the weeklies and the monthlies still remain negative. Now if we take a look at let me bring this previous chart back. You'll notice that the QQQ is still trading above the 50-day moving average. This is not true when you look at world markets, because for example the Brazilian market is trading well below its 50-day moving average, which might suggest that the strength worldwide is can be found in the US markets and not in world markets. As you can see, a steep decline below the 50, now trading closer to the 200-day moving average. So the Brazilian market seems relatively weaker as compared to the US market. Same scenario here with the French market. The French market, as you can see, trading way below the 50 and now trading below a declining 200-day moving average. So we are seeing signs of trouble in world markets, and seems like the strength can be found in the US market. Again, seems to be a breakdown here as far as the French market is concerned. If you take a look at the French market from a weekly chart, you see we are now trading below the 10-week moving average and also below the 33-week moving average. So lots of weird developments as far as world markets are concerned. Also, we have what seems like an impending cross between the 10-week moving average and the 33-week moving average. Last time we had a cross like that was sometime in July of 2011, and we had this big drop in Europe. So we're having another bearish crossover here between the 10-week moving average and the 33-week moving average. Net, there's a lot of more negativity and chart destruction in world markets as opposed to the US market. If you take a look at the FTSE London market this time, you see that we are trading way off the 50-day moving average, and we've been trying to find support on the 200-day moving average. So not trading above the 50-day moving average like you'll find in the Dow, the S&P, and the Nasdaq. Here is the S&P 500 daily. As you can see, unlike other world markets, S&P is trading at its 50-day moving average. We might have broken this trend line here, which connects it to the lows of October. But really not a severe break, because we are settling right at the 50-day moving average. So this could be an area where we see a bounce. If we don't see a bounce and we see a sell-off, then we can continue looking for the market to go down. Right now I think we are kind of in no man's land, with the dailies showing us a bounce and the weeklies and the daily charts showing us a sell-off. A continued sell-off is going to be taking place. The Dow Jones on a weekly chart you'll notice that we are still holding firm above 12,810, which was the breakout level, the highest weekly close in 2011. We had broken out here and moved higher for a couple of weeks here, and we threatened to close below that early in the week, but we managed to hold above 12,810. As long as the Dow stays above that 12,810 level, then we can look for this market to continue pushing higher week to week. Now I wanted to show this chart to you, which is a ERY, which is a 3 times bear energy chart, 3 times bearish energy chart, the ERY. What I want to point out here is if you look at this chart, you'll notice that over the last year or so, every time this market struggled to hold the RSI level like it did there, we had a sell-off on this chart, okay, which meant the market was in rally mode. We had we failed to hold that level, which is that high, and we had a sell-off, which meant the market was in rally mode. Remember, this is an inverse ETF, and again we failed to hold that level, which was that high, and the market, this instrument went down, the market was in rally mode. So now we see what's going on here is finally we are breaking out of this range. So finally we seem to be breaking out and trading above this level here and actually bouncing off this line now. So it seems to me that there's a new game in town. The sense that the market might be going lower because what has been working as far as the what has been bullish for the market seems to be forming a different chart formation. As you can see, we struggled to hold this level previously on this bear ETF, but now we seem to be trading above that level. So this trade above this level might suggest that the market might be pushing to the downside, and this instrument, for example, might be seeing higher prices in the coming days. If you take a look at the Nasdaq from a weekly perspective, you see that, as I shared with you last week, take the lows of 2009 on a weekly chart, lows of summer 2010, and the lows of early 2011, draw a straight line. You see that the market failed to hold that level, which is the underside of this line here. So that was a classic sell signal. It's not surprised that the market is moving lower for now. If we take a look at the RSI on a weekly chart, that's why I said the weeklies and the monthlies are bearish, dailies are slightly positive. You see that we are crossing over here on the MACD, which is again indication of the market wanting to go down week to week. Again, another indication of the market wants to go down can be found on the S&P 500 monthly chart. On the monthly chart for the S&P 500, you'll see that the RSI has found resistance on the RSI top lines here. We found resistance. See whether I can show that we are hitting this resistance level here and again here. So on the monthly, again, monthlies are showing actually very serious sell signal in the market. This can also be confirmed by the London market, which, as you can see on the price channel, we have formed some resistance level here. Right here, there's resistance, can't seem to hold above that level. Also on the RSI, we seem to be finding it difficult to stay and hold above the RSI top lines here, as indicated by the red arrow. So there's resistance on the monthly RSI for the London market, which is again a reputation that the monthly charts are relatively weak, if not very weak, but the dailies are showing signs of strength, and the weeklies are very also showing signs of a market that is going to be under pressure. If you now just kind of take a look at gold here pretty quickly, we see that on the GLD we are still holding support on a weekly chart on this brown line here. We've bounced off this line multiple occasions over the last 2-3 years, and then again here, and recently we are trading at this range. So gold still remains relatively within a strong range. At some point, you know, we are trading in this triangle here. At some point, gold is either going to break out, which is going to be a buy signal, or it's going to break down, which is going to be a sell signal. So gold remains on consolidation mode with what looks to me like intention to move higher. Otherwise, we'll see how this market is going to respond in options expiration week, which is usually full of tricks. Eric Muather with Muather.com. Peace and blessings.